What is happening, crypto fam? Welcome back to Bitcoin Bulletin, the only place you need to be for the pulse-pounding, fast-moving world of digital assets. The news cycle is absolutely on fire right now, and if you're not plugged in, you're missing out on some truly seismic shifts. We've got a packed show today, covering the evolution of Bitcoin's ecosystem, big moves in the Japanese market, and a potential shakeup that could send shockwaves through the entire space. Get ready, because this is the information you can't afford to miss. Let's dive in. First up, we're exploring how Bitcoin's journey from a volatile newcomer to a visionary innovation is reshaping its entire ecosystem. This isn't just about price charts, it's about the fundamental building blocks of the future. We'll break down the latest developments that are solidifying its long-term vision. Then, we're heading to Japan to uncover a massive strategic play unfolding in the corporate world. Are big companies accumulating Bitcoin as a smart macro-driven move, or are they taking on high-stakes speculation? We've got the inside scoop on what this could mean for the global market. And hold on to your hats, because our next story reveals an imbalance in Bitcoin's leverage that could be gearing up for a massive short squeeze. We're talking billions on the line, and the market is holding its breath. This is the kind of volatility that defines the crypto landscape, and you'll want to know how it all plays out. Finally, we're looking at a jaw-dropping move from a major Bitcoin whale, a colossal bet on Ethereum that's making waves. Is this a sign of things to come, or just a single massive transaction? We'll unpack the implications of this strategic capital reallocation. Don't go anywhere. Stick around as we break it all down. And if you're new here, make sure to smash that subscribe button and hit the notification bell so you never miss an update. Bitcoin's ecosystem evolution, from volatility to visionary innovation. This isn't just another price fluctuation. It's a look at the fundamental shifts shaping the digital asset landscape. The digital currency space is in a constant state of flux, and Bitcoin, the progenitor of this revolution, is no exception. Its journey from a highly volatile, often unpredictable asset to a more integrated and strategically significant component of the global financial system is a narrative worth exploring. This evolution isn't merely about price appreciation. It's about the maturation of its underlying technology, the expansion of its use cases, and the increasing acceptance within traditional financial frameworks. We're witnessing Bitcoin transition from a speculative bet to a component of a broader, more diversified financial vision, with innovations constantly pushing its boundaries. The ecosystem surrounding Bitcoin has grown exponentially, encompassing not just the core cryptocurrency, but also a complex web of related technologies, services, and investment vehicles. This includes the development of Layer 2 solutions designed to enhance transaction speed and scalability, such as the Lightning Network, which aims to make Bitcoin payments more efficient and cost-effective for everyday use. Furthermore, the increasing interest from institutional investors, evidenced by the approval and performance of Bitcoin ETFs, signifies a growing legitimization and integration into mainstream finance. These ETFs provide a regulated avenue for traditional investors to gain exposure to Bitcoin, thereby increasing liquidity and market stability. The narrative is shifting from one of pure speculation to one where Bitcoin is seen as a potential store of value, akin to digital gold, and a hedge against inflation in an increasingly uncertain economic climate. Beyond investment, the utility of Bitcoin is also expanding. Developers are continuously working on improving the network's security, privacy features, and overall functionality. The ongoing development in areas like Taproot upgrades has enhanced smart contract capabilities and privacy, making the network more robust and versatile. Moreover, the global adoption of Bitcoin as a medium of exchange in certain regions, coupled with the increasing number of businesses accepting it as payment, points towards a future where Bitcoin plays a more tangible role in daily commerce. This broader adoption is supported by advancements in user-friendly wallets and payment processors, lowering the barrier to entry for both individuals and businesses. The narrative of Bitcoin's evolution is further bolstered by its resilience and adaptability. Despite facing regulatory scrutiny, market volatility, and technological challenges, The network has consistently demonstrated its ability to overcome obstacles and innovate. The ongoing discourse around Bitcoin's role in a decentralized future, its potential to disrupt traditional financial systems, and its capacity to serve as a global reserve asset continues to drive interest and development. This visionary innovation is not confined to incremental improvements. It encompasses a fundamental reimagining of how value is stored, transferred, and managed in the digital age. As the ecosystem matures, it attracts a wider array of participants, from individual hodlers to large corporations and even nation-states, each contributing to its ongoing development and integration. But this steady evolution isn't the only story. Get ready for a strategic financial maneuver happening on a global scale. Next, we're diving into the corporate world of Japan to see if major players are making a calculated macro-driven bet on Bitcoin, or if it's pure high-stakes speculation. Corporate Bitcoin accumulation in Japan, a macro-driven strategic play or high-risk speculation. Are major Japanese corporations making a calculated bet on Bitcoin, or are they venturing into high-stakes speculation? Recent financial maneuvers by prominent corporations in Japan have ignited a significant debate regarding their strategic approach to Bitcoin accumulation. As the global economic landscape shifts, influenced by varying monetary policies and inflation concerns, a growing number of Japanese companies are reportedly increasing their Bitcoin holdings. This trend raises critical questions. Is this a forward-thinking, macro-driven strategy designed to hedge against economic uncertainties and capitalize on potential long-term asset appreciation? Or is it a high-risk speculative venture in a notoriously volatile market? The implications for both the companies involved and the broader cryptocurrency market are substantial, warranting a closer examination of the underlying motivations and potential outcomes. The backdrop for this corporate interest is the unique economic environment in Japan. For years, the nation has grappled with persistent low inflation and interest rates, leading to a search for alternative investment vehicles that offer higher yields or serve as effective hedges. Coupled with a global inflationary trend and a weakening yen, Bitcoin has emerged as an attractive option for some corporations seeking to diversify their treasury assets beyond traditional cash reserves and government bonds. Companies are reportedly exploring ways to allocate a portion of their balance sheets to Bitcoin, viewing it as a potential store of value that could outperform fiat currencies in the long run, especially in scenarios of monetary easing or currency devaluation. However, the decision to invest in Bitcoin is not without its risks. The cryptocurrency market is characterized by extreme price volatility, influenced by a myriad of factors including regulatory changes, technological developments, market sentiment, and macroeconomic events. A significant downturn in Bitcoin's price could lead to substantial losses on corporate balance sheets, impacting profitability and shareholder value. Analysts are divided on whether these corporate moves represent a calculated risk based on a deep understanding of Bitcoin's long-term potential and its role in a digitalizing economy, or if they are succumbing to the allure of high returns without fully appreciating the inherent volatility and regulatory uncertainties. The specific mechanisms of accumulation, whether through direct purchase, derivatives, or investment funds, also play a crucial role in assessing the level of risk involved. Furthermore, the regulatory environment in Japan, while generally supportive of digital assets, is still evolving. Companies must navigate compliance requirements, reporting standards, and potential future regulations that could impact their holdings. The long-term success of these corporate Bitcoin strategies will likely depend on a combination of factors: Bitcoin's performance as an asset class, the company's risk management capabilities, their ability to adapt to regulatory changes, and the broader macroeconomic conditions. This strategic accumulation by Japanese corporations could set a precedent for other businesses globally, influencing how corporate treasuries are managed in the digital age. It is a complex interplay of economic strategy, technological adoption, and risk assessment, making it one of the most closely watched financial developments in the current market. But what if the market itself is signaling a potential storm on the horizon? Prepare yourself, as we uncover a critical imbalance in Bitcoin's leverage that could be poised for a massive short squeeze. Bitcoin's leverage imbalance could trigger 4B short squeeze. A looming leverage imbalance threatens to unleash a massive $4 billion short squeeze, sending shockwaves through the market. Bitcoin's derivatives market is showing signs of significant strain, with leveraged positions reaching critical levels that could precipitate a substantial short squeeze. Data indicates that short exposure in Q2 2025 is nearing a tipping point, where a price drop of just 7% could trigger a cascade of liquidations totaling $4 billion. This scenario is exacerbated by the inherent fragility of highly leveraged trading, where even minor price movements can lead to amplified losses and forced deleveraging. In August, a notable $2.7 billion whale dump of 24,000 BTC already caused over $500 million in long liquidations, highlighting the sensitivity of the market to large trades and the interconnectedness of leveraged positions. Following this event, open interest in Bitcoin futures contracted by 10.6%, suggesting a partial unwinding of speculative bets, yet the concentration of leverage, particularly in long positions, remains a key concern. The self-reinforcing nature of leveraged trading means that a downward price correction can quickly spiral into a larger sell-off. When prices fall, leveraged long positions are automatically liquidated as collateral values drop below margin requirements. This selling pressure further drives down the price, triggering more liquidations and creating a vicious cycle. The MVRV, market value to realized value, ratio, currently in what analysts describe as a danger zone, suggests that short-term holders are in profit-taking territory. While this might reduce the likelihood of panic selling from this cohort, it does not eliminate the risk of sharp, sudden corrections driven by leveraged entities. Despite these short-term risks, there are mitigating factors in the broader ecosystem. MicroStrategy's substantial $71 billion Bitcoin holdings, supported by $7.2 billion in convertible debt, continue to act as a stabilizing force. Analysts point out that even if Bitcoin's price were to fall below $30,000, triggering forced liquidations for the company, its long-dated debt maturities provide a significant buffer. MicroStrategy's position, representing about 3% of the total Bitcoin supply, is seen as an indirect shield against systemic shocks. Meanwhile, institutional capital flows show a nuanced picture. While there has been a notable shift towards Ethereum, with its ETFs attracting significant inflows and DeFi lending platforms expanding, Bitcoin's long-term narrative remains robust. Ethereum's DeFi lending has seen a 42.11% increase to $26.47 billion, with Ethereum dominating 78.22% of the lending supply, indicating a maturation of leverage strategies across the crypto space. Technically, Bitcoin is exhibiting mixed signals. A breakdown below the Bollinger Midline and a bearish MACD indicator suggest short-term bearish momentum. Key support levels are identified between $110,000 and $115,000. Historically, corrections to these levels have often preceded renewed uptrends, particularly when institutional buyers step in. On-chain metrics, such as declining exchange outflows and a stabilizing short-term to long-term holder-supply ratio, support the potential for rebounds from these price zones. Macroeconomic factors, including upcoming Federal Reserve policy decisions and the performance of Bitcoin ETFs, will also play a crucial role in shaping market sentiment. Disciplined risk management and strategic positioning will be key for investors navigating this period of potential volatility. This intense market activity is creating ripples far beyond Bitcoin's immediate price action. Now, we turn our attention to a massive capital reallocation, as a major Bitcoin whale makes a colossal bet on Ethereum, signaling a potential shift in market dynamics. A Bitcoin whale's $3 billion bet, why Ethereum is winning. In a stunning display of market conviction, a major Bitcoin whale is shifting billions to Ethereum, signaling a potential paradigm shift. A significant Bitcoin whale has orchestrated a massive capital reallocation, moving approximately $108.27 million worth of Bitcoin into Ethereum in a single transaction, marking a broader two-week pivot that has seen billions redirected towards the second-largest cryptocurrency. Data from on-chain analytics platforms reveals that this prominent investor has accumulated around 691,358 ETH, valued at roughly $3 billion over the past fortnight. This substantial move represents one of the most significant capital shifts between the two leading digital assets in recent times. In one notable 12-hour period, the whale offloaded 2,000 BTC, equivalent to $221 million, and immediately reinvested the proceeds into acquiring 49,850 ETH, valued at $219 million, on spot markets. This pattern of selling Bitcoin and buying Ethereum underscores a strong, ongoing conviction in Ethereum's market potential, especially within the current dynamic economic environment. This whale's actions are particularly noteworthy against the backdrop of Bitcoin's recent market performance. Over the past week, Bitcoin experienced a price decline of 5.96%, falling from approximately $115,560 to $108,572. While its market capitalization remains substantial at $2.16 trillion, and its 24-hour trading volume saw an increase of 11.58% to $72.74 billion, the price depreciation is evident. The whale's decision to divest from Bitcoin and bolster Ethereum holdings amidst this downturn suggests a strategic play based on perceived relative strength or future growth prospects. The investor also recently closed a leveraged long position on 96,452 ETH, securing a $2.6 million profit, before reinvesting these funds back into spot Ethereum, further emphasizing a commitment to the ETH ecosystem. Concurrently, Ethereum's ecosystem is experiencing a surge in innovation, particularly within its liquid restaking protocols. The total value locked, TVL, in these protocols has surged to an impressive $30 billion. This growth reflects a clear trend among ETH holders to migrate capital from traditional staking mechanisms to more dynamic, yield-generating strategies. Protocols like EtherFi and EigenPi have seen substantial user adoption and capital inflow since the beginning of the year. Investors are increasingly drawn to liquid restaking solutions because they offer the dual benefit of earning enhanced yields while maintaining liquidity through tradable receipt tokens, unlike traditional staking, where assets are locked. This migration signifies a maturing DeFi landscape where users seek optimized returns and greater capital efficiency. The broader adoption of these sophisticated yield strategies by Ethereum holders indicates a growing confidence in the network's underlying technology and its potential for innovation. As DeFi protocols continue to evolve and demonstrate resilience, users are more inclined to explore advanced financial tools, even during periods of market uncertainty. The move from native staking to liquid restaking is not an abandonment of the Ethereum ecosystem, but rather an adaptation to new opportunities for capital deployment. This trend aligns with the larger capital reallocations observed across the market, reinforcing the narrative of Ethereum's growing appeal as a platform for innovation and attractive yields, potentially outpacing Bitcoin's current utility-driven narratives. These massive shifts in capital and market sentiment are creating a dynamic landscape for all investors. We've covered some explosive developments today, from ecosystem evolution to major whale movements. Don't miss our quick recap and your chance to stay ahead of the curve. And that's a wrap for today's Bitcoin Bulletin. We've seen Bitcoin's ecosystem evolving rapidly, corporate Japan making strategic moves with Bitcoin, a potential $4 billion short squeeze looming, and a major whale making a massive bet on Ethereum. Stay informed, stay ahead, and make sure you're subscribed with notifications on. Like this video if you found it valuable, share it with your network, and let us know your thoughts in the comments below. Follow us on all social platforms for real-time updates. We'll see you in the next one.